thank you, everyone, for being here. We figured out before we came on stage that there's more than $1 trillion on the stage, so I'm sure you're here for the money. We are going to talk about lots of things, but we're going to base our discussion in the concept of trust, trusted brands, trusted leadership. How do you build a trusted brand, and how do you become a trusted leader? I follow the trust business because I'm kind of in the trust business, and it might surprise you that businesses right now are trusted more than the government, more than religious institutions and many other institutions. So as business leaders today, the idea of trust and reputation is so incredibly important because our stakeholders are depending on us actually more than a lot of the institutions they used to. So let's start with that. We're lucky we have some of the most trusted brands in financial services on the stage right now. So I'm going to start by asking each one of you, as we get into it, if you had to pick one thing about your organization that has stood for trust with your stakeholders, what would that one feature be? Why don't we start with you?
I'm CalSTRS, California Teachers, and for us, there's no question. It's hitting that monthly check in their mailbox or direct deposit every month without stop.
So dependability.
That is absolutely what they know and think of us.
Okay, so reliability. And again, please do introduce yourself and give a little framing for your institution. Go ahead, John.
Okay, well, thank you, and thank you for the invitation to be here. So John Graham, I'm the CEO of CPP Investments, which is essentially the asset manager for the surplus funds of the Canada Pension Plan. We manage just around $600 billion of assets today. And think about the question and what has really driven the trust in the organization, and maybe both internally and externally. Every year as an organization, we do an employee engagement survey. And we give our employees an opportunity to share their perspectives on compensation, on bureaucracy, decision-making, and all feedback is a gift. And there's one area that, every organization has things they have to work on. And there's one area that our organization will score when we compare it around with other firms where we'll score top decile or even like top percentile. And that's purpose. In that the people at the organization and the people outside the organization understand the purpose of the organization. CPP is a compulsory program. It would be analogous to Social Security. Every working Canadian contributes to it. And it's a promise. It's a promise that when that money comes off your paycheck every couple weeks, when you retire, there will be something that will allow you to live in dignity when you retire. At a time when you're most vulnerable in life, that you can count on this to be there, and to be there as long as you live. It doesn't matter if you live to 100, it'll be there. And same as Chris mentioned, people can expect it and they can rely on it, and again, allow them to live with dignity. And it's that purpose. And so we, at the organization internally, we really do try to drive everything we do towards the purpose of the organization, knowing that it is probably the most unifying aspect of the organization, and externally going back to who is the ultimate client customer. It's the 22 million working and retired Canadians, and ensuring that we keep communicating our dedication to the purpose.
Excellent. So back to that reliability and purpose. Aditi.
Hi, everyone. Aditi Javeri Gokhale. I'm the Chief Strategy Officer, the President of the Retail Investments business, and the head of the Institutional Investments business. So I oversee about $630 billion in client and company assets. So Northwestern Mutual is over 160 years old. We're the largest life insurance company and one of the fastest growing independent broker-dealers in the country. So to your question, I think what makes us unique from a trust perspective is the idea of mutuality. And let me explain what I mean by that. So mutuality means, think about it as being a large cooperative. So we are owned by our policy owners. We're not a public company. We're not owned by shareholders. And so the idea and the philosophy for every employee in the company is that every single dollar of profit that we make, we need to return it back to our policy owners in the form of dividends. So for example, in 2024, we're going to be paying out almost $7.3 billion of dividends. That is 3 times more than our nearest competitor. So the philosophy is that we've got to pay it back. The second idea that we have is, as an employee, when we start, this idea of when I start a job with the company and when I leave, I got to make it better than when I started. So this idea of this intergenerational compact that we have, that I have to pay forward and I have to make it better, that's always ingrained. And even, not many people know this in terms of our product lines, each and every product line have to hold its own. So you can't be stealing from Peter to pay Paul, which I've seen in many other companies. So every single product line has to hold its own and has to basically, it's got its own P&L. And I think that in itself builds a lot of trust and transparency from an employee perspective, from a client perspective. And I think that makes it very, very unique.
Great. And if you have questions, we are going to take questions at the last 10 to 15 minutes. So feel free to use the QR code and send them to me. I'll get them up here and I will relay them here on stage. Doug.
Yeah, I'm Doug Sigg, the CEO and managing partner of Lord Abbett, which is a $200 billion investment management firm founded in 1929. And I'd have to say, if you think about what instills trust, it really, I believe, is our independent structure. We've been an independent private partnership since 1929. And I think that what it does is it informs decision making. It allows you, we're in a world where we compete, where so many other asset managements are either part of a large, insurance company, part of another company, have merged together, are public now. Every day when the 46 or 47 partners go into a room, we know it's our assets on the line. And so every decision that we make has to be in the best interest of the client. It was funny, the firm was founded on November 18th, 1929, which was about 2 weeks after the stock market crash in 29. And the first introduction to the world was actually in the Wall Street Journal, and it said, an investment firm worthy of its name fosters a sound relationship between the house and the client. And I think we take that deeply, and that informs how many products we have. Like when we can't do something well, we know we can't, and we let people know. When we have a core competency, we can build off of that. But I think it really is, that independence and the independent structure, I think is such a value added, in the environment, takes away conflicts and allows for complete focus.
Okay, great. So Deloitte did a study on building trusted brands, and the words they used of the trusted brand components were capability, reliability, humanity, and transparency. We heard a lot of those words just now on stage. John, you are known for your transparency at CPP. If I'm right, you've been top rated for governance and transparency for years and years. What do you do that's different than your peer group that gets you that kind of recognition?
Yeah, so I think what you're referring to is a couple years ago, we did win an award as the most transparent pension plan or institutional investor. Another European plan was determined to win it the next year, and they did win it the next year, but we'll get it back.
Okay,
and
can't get it every year.
We'll get it back. And transparency is something that is really ingrained in the organization. And I mentioned this is a compulsory program. Every working Canadian needs to contribute to the plan. And it's important. It's really important to people across the country. And we've made a decision years ago that we need to really embrace transparency. People need to know how their money is invested. We've gone as far as doing public service announcements in Canada. And people do ask questions, this is a compulsory program. Why are you doing public service announcements through social media or through other forms of media?
I love that.
And say it's because we need people, we're just trying to push them to the website. And this is going to be a pretty important part of people's financial security and retirement. And people need to become informed. And it's really trying to drive financial literacy. So not only are we really disclosing, we disclose every position in the portfolio, despite the fact that that generates criticism for us, and then we actually proactively try to engage with stakeholders, both at the government level, but with the Canadians, and to drive traffic in through our website where we're providing that transparency.
By the way, it won't surprise a lot of people that Canadian companies are rated much higher than American companies when it comes to trust. Let's talk, Chris, about the collaborative model that you're so famous for. To some degree, I read that collaborative model and the components and said, a lot of that is about building trust between the GPs and you. Tell us about the collaborative model, what that means, and why it's been so successful. And by the way, Chris is about to retire. Have you been there how many years?
23 and a half.
23 and a half. So we'll talk about that. Amazing, right? All right, but this will be I think, a big legacy for you. So tell us about the collaborative model.
Well, and I give the team a lot of credit. It was looking at the 2 and 20 private equity model that was being repeated by hedge funds and saying we need to find a way to do business differently. And the board was really pushing us on finding a way to do business differently. And you're right, a big key component of that with GPs is trust.
Yeah.
Because they like control, they like ownership. Public equity fund or public funds typically have a lot of turnover, a lot of change. But it was establishing that, hey, we're long-term investors, we're sticky money, and therefore I think we can work together, get to know us, we'll get to know you, and let's find another way to do business together instead of that LP-GP, which is a very constrained and legalistic structure.
Yeah.
And we don't want to tell them how to run their business, because that's a big fear of theirs when they let us in the door. But it's really like an agreement of, hey, you want our capital for a longer time period. Let's find something where we can share in the success instead of just a rigid 80-20 type of structure. So for us, I got to say, the staff has been incredibly creative. The GPs have been creative. Some cases launching new products, some cases owning part of the firm. In one case, we own 80% of the firm. And allowing them to get to know us and for us to then have a better say without telling them how they are doing business, but a better governance structure and a better return. And I think you're right, trust becomes a huge key part of that. I have seen some of the Europeans that formed their own internal investment where they came together, and it's so sad that public pensions or pensions and trusts, oftentimes there's more conflict between us when we're in a joint venture together. So that's what comes down to getting to know, and I think the other word I think of is authentic.
Yes.
Being who you say you are and showing that to people.
Over a long period of time.
Yep.
Doug, you say very publicly that your goal is to be the most respected asset manager. What does that mean, the most respected, when you unpack that?
Sure. I mean, I think when you think about the space that we compete in, there's so many people who are focused on becoming asset gathering machines, right? And certainly that's important because it's important to have an organization that's growing and being stronger, but I don't necessarily believe our organization is better if we're bigger. I believe our organization should be measured, and when you look at the best organizations, you sit down and say, okay, number one, let's think about the quality of what they do. Let's think about, many firms our size would have 200 or 300 products. We have 45. And we are very adamant on the quality of that product. And we're also very open. And we're willing to say to you, I'm a big believer in transparency. I say to people all the time, 35 of our products, you'd be so proud to be invested in. 10 of them you will be one day proud. And probably 5 we need to go fix because we might have a problem here. And we need to do that better on behalf of our clients. So when I think long term, I think about when people think about an asset management firm, they think about what structure, how do they align themselves, how do they put the client first, how do they think about earnings, how do they think about sharing that partnership you talked about with clients, how do they make sure they understand how to be a partner and what does that mean? And sometimes that gets lost in our industry. And that's one where we think about being the most respected. It should be best people, highest quality people, think about how we grow the business the right way, not being, an asset gathering machine, and also making sure we are delivering on behalf of the clients over long periods of time. And I think that's a critical component of trust and critical component of leadership.
Aditi, I want to underscore, you're the only person on the panel who also, well, not the only, but you have the retail customer as a customer. And I think you reminded me of 20,000 financial advisors who are responsible for the well-being, financial well-being of families. You also have an incredible retention rate with those relationships. Talk a little bit about the consumer and how you're building trust there. A lot of people in this room, GPs anyway, will be going into the retail space for the first time. So give us a sense of how important trust is there.
So it's extremely important. I mean, it is the currency, especially when you're in a business such as ours with Northwestern Mutual, which is not only do we have financial data, but we have health data. And if you think about clients, those two aspects of your life, health and wealth, are the two most important aspects of your life, right? So we treat that with utmost importance. The second thing is we're not a direct-to-consumer model, right? So we deliver financial security through our advisors. And so the first step with our advisors aren't our employees, they're contractors. So we first have to build trust and that relationship with our advisors. And how do we do that? And of course, we've been around for 160 years, so it hasn't happened overnight. It's happened over a long period of time. The first thing that we have done, and we've got an incredible culture, is by working with them, we involve them in the decision making, whether it's tools, whether it's capabilities, whether it's our products, our pricing models. We have committees where we co-create with them. So they become part of the decision making. So our advisors believe in our products. Our products are only sold through Northwestern Mutual advisors, right? We don't broker our products through everyone and anyone. So that's important for us, and that's the first step through our advisors. And then our clients, as you mentioned, we've got a 97% persistency, which means
pretty good.
It's just
Everyone
pretty
would
high,
like to have that,
which
Ms.
is
Ray.
pretty high. And that happens clearly through a great advisor experience, but it also happens because our clients know, and again, this is something that we feel is extremely important. You've got to walk the talk. So it's not just about the words, it's about taking consistent action. We are financially very strong. We are one of the only companies, I think there are 6 companies in the United States that's AAA rated, us, Microsoft, and a few others. In the last 160 years, we've weathered all kinds of storms, the pandemic, the Spanish flu, the depression. So our clients know that they can trust us, and we're going to be around for thousands of years to come. That builds trust, right?
So let's talk about that consistency over a long period of time, because we do see in our own worlds many companies and brands that kind of go with the wind. They're not consistent. I watched some film of you making a point about ESG, and I know everyone's sort of like trying to figure out what ESG means in their organizations now. But you talked about how some GPs have like a red book and a blue book. That doesn't sound right to me in terms of consistency of values or belief systems. So how do you as allocators look at something like that when it comes to this idea of trust and consistency in values?
You know, it's interesting. I have seen marketing people who are very good at their craft come to a teacher pension conference and almost act like educators. But then I had the interesting experience of a weekend later being at what's called a Guns and Hoses. That's the fire and the police pension.
Guns and hoses, that's amazing.
And the same marketing person suddenly acted like a Western cowboy. And I thought, good for them. They know their audience, but boy, it sure doesn't feel very authentic.
Yeah.
Right.
I don't know who is the real person. And I think that's a big part of that focus is being authentic, being consistent of who you are and who do you present. And unfortunately, you're right, ESG has become a toxic word, those letters. Larry Fink says he won't even say those letters anymore.
I feel like he helped create them.
It's really about sustainability, about long-term thinking. But suddenly, and unfortunately, it's a sign of America, how divided our country is. I picked on Canada, sorry, because I said, hey, in Canada, it's okay to have a French book and an English book. You're supposed to, you know? But I am starting to see that in America where people are going through their pitch books and Xing out keywords they know will offend in one state but not in the other. So there's that balance of knowing your client and being who they are, but I think on the financial asset management side, they have to really represent their culture and be consistent of that and not twist it to what they think the client wants to see.
You want to riff on that?
Maybe with ESG, and I know that, again, it's a 3-letter word. But I do believe, and I'll just share a personal perspective, I do believe that most investors, whether they admit it or not, incorporate ESG into investment decisions. And take governance, the G. Don't invest in a company that doesn't have a board of directors.
Yes.
On the S, don't invest in a company that uses child labor. And the E, don't invest in a company that dumps toxic waste into rivers. And we were quite explicit, we will incorporate ESG into investment decision making. But again, my personal perspective and how the organization thinks about it is, ESG is something that every organization needs to decide where they're going to calibrate on each one of those dimensions. They need to reflect on what they're solving for, what their purpose is, what their objective is, and decide where they're going to calibrate. And then ESG became a product that was being sold, and people were buying other people's calibration. And I think that's where every institution, organization needs to really reflect on their purpose, their objective, their values, and where they want to calibrate. And that's what we've done. We can talk more about it. We can talk more about how we are a big investor in the energy transition, renewables. We're also a really big investor in oil and gas.
Yes.
And continue to invest in oil and gas, and continue to believe it's important to support the conventional energy sector to transition. And I'm happy to take questions on that.
So we're talking about trusted brands and trusted companies, but the reality is leadership matters, and trusted leaders are on top of these companies. Doug, you're the 10th CEO or managing partner or whatever you call it at your firm, which means you're a steward for a certain amount of time you're there. When you think of leadership and trusted leadership, what do you hope to be known for over your period of time looking over this firm that's been around since 1928?
Sure. First, I would just jump off of the consistency standpoint.
Yeah.
And it's interesting when you think about it. And I would never stand up here and say, hey, I can represent what great brands are in the world. I wouldn't want to be on that panel. But I will say, when you think about great leaders and you think about people who generate trust, there are a handful of things that we've already touched on that are just so important for them individually. Number one is consistency. Like, I've never met anybody who runs in and be like, I can't wait to go into my boss who I have no idea how they're going to react.
Right.
Right? The reality is it's consistency over a long period of time. It's being authentic. Right? I remember I'm very different than my predecessor, my two predecessors. My two predecessors ago told me once he never says hello to anyone in the building because then he'd have to say hello to everyone. And he was a great leader, but an incredible introvert. And I remember he would say to me, you're going to have to really be quiet when you get up. I'm like, I don't think I can do that role. Like, people think, what happened to Doug?
I'd be bad at being a quiet leader, yeah.
So how do you become authentic? And then the last is, how do you generate trust? And I'll tell you, I don't know every way to generate trust, but I know one, and that's give trust first. And that's really be able to go out and say to your employee base, the people that are around you, look, I trust you. This is what we need to get done. You're professionals, you're good at what you do, and I'm going to give trust. Because if you don't give up trust, you're never going to give it back. And maybe over time that gets broken, and that's your course correct. But the reality is, I think it's when you think about just some of the stuff we're talking about, that is the DNA of great leadership. I am the 10th managing partner. It's an incredible honor. You get into the seat, and all of a sudden you realize the number one thing that matters is that I leave this organization better than it was when I first got a hold of it. And it sounds kind of corny when you hear that, but it's absolutely true. You sit there right away and say, this is so important. And in my view, the biggest gift I can give the organization is to make more leaders. And when I sit in front of our partners, I sit in front of people leaders, I sit in front of people around us, I realize, and I remind them, leading people is the greatest compliment you can ever get in your career. And it's the most important thing you'll ever do. Because they don't want a friend, they don't want a buddy, they want a leader. They don't even want a boss, they want a leader. They want somebody they can respect over long periods of time. And the more leaders we can make, great leaders make more leaders. And then they make more leaders. So I think that's, if I had to say, and I'm not going anywhere anytime soon that I know of, but if I do, I hope it's that we stress leadership and making better, became students of leadership over time.
And I liked your point about reciprocity. I mean, you trust in them, they trust in you. I mean, in general, human beings are reciprocal.
Can I just add something to
Go
this?
ahead.
I think because that part of the discussion was about openness and transparency,
Yes.
and I think you talked about authenticity. More importantly, I think it's a two-way street, especially with sort of the way talent is nowadays. It's about a two-way street, being completely leaning and being humble. saying you don't have all the answers, but being also very decisive in terms of giving direction. And I think what has worked for me as a leader with my team is the openness and the direct approach. Saying I don't have the answers, here's where I complement you, here's how we work as a team together. And building that trusted relationship where it's okay to fail, but taking calculated risks and it's okay to fail. I think that creates that dialogue, that openness of like, there's a fear of failure, especially in our industry, where everyone feels like they've got to get it right,
Yeah.
especially on the asset management side of things. And, I always tell my team, you don't always have to get everything right,
Yes.
but it's okay to fail, but you fail and you move fast and you move on. And I think that's important.
So I think you bring up something important. I mean, you talked about failure.
Yeah.
And my dad at least taught me that you're going to be judged when things go wrong, not when things go right, and how you handle them.
And how you handle them.
So does anyone have an anecdote they are willing to share about when something went wrong and when it was handled right, it really built trust with your stakeholders? Anything you can think of?
I can jump
Yeah,
out.
please.
In 2008, and I would use examples of where I think that is so true, that transparency, being transparent when you make a mistake,
Yeah.
you've done something wrong, and we know some famous legends. You brought up Tylenol when
Yeah.
you were talking to us as examples of companies that were open and transparent in a moment of crisis. I'll just talk about 2008, where obviously all of us were getting crushed and losing money, but being much more vocal and communicating more. It's sad, I've been in the business long enough that I have a file that's called Market Crashes, and I could pull it out and add examples of 87 and other times we've written memos. But to be able to put out something quickly to, in our case, teachers don't pick up and call, but I was amazed that we would get phone calls from beneficiaries who, my wife was a teacher, my husband is a teacher, am I still gonna get that pension check? And we even told the call center, anybody wants to talk to an investment person, put them through, and we will talk to them so they understand. And I remember gathering the staff and saying, part of our job, we all live in that area. We almost all had young kids. It's like, whether you're in a grocery store, in your neighborhood, or at your school, talk about what we're doing and tell them we're okay. And I think that constant communication, and even in the building, helped everybody. It's like, yes, we're stressed, yes, we're losing money, but we have a balanced portfolio. It will weather this storm. And that confidence, I've always told CIOs when I've talked to them, that you need to constantly communicate with your board, but in a market drop, you need to communicate 2 to 3 times more.
Oh, definitely.
And I remember when COVID was coming out and they were starting to shut down in the quarantine, you're out here in California, so you realize the market closes at 1 o'clock our time, and in another hour, Tokyo will open. And so I share that only because instead of saying I wrote the board morning, noon, and night, I would write the board at late afternoon, at midnight when Europe opened, at 4 or 5 a.m. as New York was preparing, and then at 1 o'clock. So literally around the clock to tell them what was going to happen. I think I got one email back of just, oh, hey, thanks. But I heard later when we met, they just appreciated that reassurance.
Absolutely.
My
Yes.
live example to everybody, if you flew here, it was super strong turbulence just even coming down from Sacramento. Having the pilot, when you hit turbulence, come on and say,
What a great example.
we expected that, or we're trying to fly around that.
This is normal.
You're not going to get up there and fly the plane,
Yeah.
but you're just a little bit more comfortable. Somebody's in
Communication.
charge,
Yeah.
paying attention.
No, it's so
versus nothing
true.
going on at all.
What a great anecdote. I see you nodding. Did you want to share something?
Well, it's probably a slightly different example, but one where we had an opportunity to probably erode trust and needed to react. And that we have, similar to you, Chris, we have a big portfolio.
Yeah.
And we have a portfolio that is also part passive. And wake up one morning and you see above the fold an article about something that's in the portfolio. And reading it and realizing that it's probably a very, very, very small position that sits in the passive portfolio that now is on the front page of the newspaper. And what is not an acceptable answer is to say that's in the passive portfolio.
Yes.
And that we are the fiduciaries and we need to own every position in the portfolio. But what is also not, what we couldn't do is immediately just start divesting, because we won't do blanket divesting.
Yeah.
And then managing with stakeholders, managing with the media, managing with stakeholders, managing with the board. This is the process we're going to go through to ensure that we are comfortable with every position that sits in the portfolio. It's one of the reasons I do feel that for organizations such as ours, there is no such thing as really passive investing. That the portfolios are scrubbed so cleanly based on what I just mentioned around our calibration for ESG, that our passive portfolio, I'm sure, looks nothing like anybody else's passive portfolio.
Do either of you want to share a story of when something went wrong and how you course corrected?
Yeah, I mean, I think, and look, all we have to say is COVID, right? Because that was the moment, right? And you think about a large fixed income manager. It's interesting, I always say as a leader, the one thing you can control is the temperature in the room.
Yeah.
So how you respond. If you want to turn everything to everybody fight, you can do that. You want to turn it to everybody get along, you can do that. You can build the culture, through how you respond. And, and if you think about investors, and we're talking about like our investors, if you get like 65% of everything correct, your reward is compliance comes and visits you because they want to know why. So you got to realize these are people who went through incredible education. You go into an environment, and we had tremendous performance. And I remember, during COVID, everybody got hit, spreads widened, interest rates, everybody was sort of offsides. And all of a sudden you were at a portfolio review and you realize you got this incredibly smart team. They're really good at what they do, but their performance looks terrible. And it was so extreme in that time frame. It happened so fast that could wipe away a year or two of performance. And I remember getting on a call, and it was Zoom, and I'm like the worst Zoom participant in the world because I just don't like Zoom. I'm listening, the meeting starts, it usually lasts about an hour and a half, and I was like, stop. Like, nobody got stupid. Clients are putting money with us because they trust you. This is a waste of time for us to even talk about it. Just go do your job and put your head down, and a year from now, we're going to look outstanding. And you felt the market turning. And I think that really tells, where you get leaders who will, just pick away at a mistake like that or pick away at certain small things. And I've learned over periods of time, particularly with investors, psychological safety is probably the most important thing you can give them. And if you give them that trust and you say, it's going to be okay. Like, you just do the best job you can do every single day. You try as hard as you can on behalf of the clients. We'll work together. We'll put a good team around you. You're going to have a better experience than if you scare them and you make people nervous. And I think that's true just in life.
Go ahead.
I have a little bit of a different example since we've all talked about portfolio performance. I'm not going to add to that. 9/11. And so, our country lost 3,000 people, senseless killing. And of the 3,000 people, 157 of them were Northwestern Mutual clients. We knew every single one of them. Our advisors knew every single one of them. And the moment our executives knew or had the chance to flew in with our advisors. We didn't have death certificates. We got flight manifests or somebody to vouch for the client or happened to work at the World Trade Center. And within a matter of days, we paid $125 million in claims, the largest payment made by any company.
Wow.
I wanted to connect it back to the building trust, because that's where companies usually walk away, and that's where you're not supposed to just survive, but thrive and take action.
Yes.
So that was a challenging time for every single company, right? Nobody knew what was going on, and especially for a life insurance company, right? But that's where the rubber meets the road, and
Definitely.
we did the right thing.
You were going to break in with something.
Well, I was going to build a little bit on Doug's part. I remember COVID, and I was running our global credit business. And the first kind of few days, maybe the first week, and being asked, what do you think is going to happen to EBITDA multiples? I said, well, these companies have no revenue, so I don't think it's going to be very good.
Won't be good.
But I do reflect on that, and I think it's very grateful that the organization just said, you're running the credit book, just manage it.
Yep.
Work through it. And I didn't have to give 3 updates a day, and they said, just manage it?
Well, I
Well-
think in that, I would just say in that too, so much of that, I mean, there are such great leadership moments. We hit on all of them, like global financial crisis, COVID, 9/11. And if there's one thing I think that's so important, and you talked about communication, it's letting people clearly know what you're thinking as a leader.
Yeah.
It's really being in front of them. And I remember, the first day we were out with COVID, I said, look, I don't know exactly what's going to happen. This doesn't feel great. I know nobody feels great. I know everybody's scared, but everybody has a job. There will be no layoffs. We're a private partnership. Layoffs aren't going to help us. So as long as you do your job, we're cool. If you're not doing your job, obviously we're not cool. So we want you to do better. But you have a job, so you don't have to worry about that. You'll be here over that period of time, because when the markets turn back, we need people to run the money, we need people to go get the money, and we need people to service the money. So that's the last thing we can do in a people business, is downside. And by the way, I'm going to tell you, there's going to be every publicly traded company is going to be forced to announce layoffs. Just know we're safe and we're good. It's small things like that that allow you, I think, as leaders, to differentiate yourself, and allow, as companies, obviously, as leaders, those are the moments that you kind of remember most, I think, growing up, and those are the ones that you hope you can instill on the next generation.
I think you also, with communication, need to take decisive action, right? Whether it's the right or the wrong action, only history can tell. But I think employees are looking for decisive action at that moment. And sometimes leaders fail to do that. They're communicating vaguely, they're not saying much. You just need to take decisive action.
What were you going to jump in and say?
I think with leadership, I have found that while you read leadership books, and so often it's a big, bold statement that we remember of a famous leader, to me, it's really 1,000 little decisions you make every day of every week, and whether you're authentic in your word or whether it's false. So if you're overly optimistic, and I've seen leaders like that, who think blowing out sunshine is exactly the thing they should do. Some people buy it, but then it's like your word is, in our business, your word is your bond. When you say buy, people expect you to close, or sell. They expect you to close on that transaction. So to me, as a leader, that authenticity and bond of your word is really, really critical. And that's what builds trust.
I would throw into that too. I always say, and it's, I've coined them the SIG rules. I have 4 daughters. I tell everybody.
Oh, you have SIG rules. Yeah, what are your SIG rules?
All the time. Number one, and I always believe it's important because you have to have something you stand for. Like every great brand has something they stand for. But it's always tell the truth, always try your best, always be kind, and always do what you say you will do. And if you follow those 4 and you want to stand for that, life's going to be pretty good. And if you get in a problem, go back and read those. And I think it's so important, like the great brands, and they're on the stage here or they're around this conference, obviously, you know what they stand for. And to your point, it's so consistent. And if things aren't great, you have to be like, hey, we screwed that up. Like, that was no good. Like, we're not great there. And let's course correct, but at least we know.
So there'll be a lot of GPs in the audience wanting to know, how do they build trust with allocators like you over time to actually get to a point where you get into a partnership? What does that look like? And how does a new GP build trust with you over time to the point where you're ready to become a partner? Either one of you want to jump in on that?
Yeah, I can share. As we think about kind of the partnership approach, and we have guiding principles at CPP Investments. Partnership is one of them. And I've had this discussion a few times over the past couple of days, in that we do follow a partnership approach. We have lots of GP partners around the world. And what I ask the team to do at CPP Investments is really try to engage in a discussion and share what we're solving for. Share what we're actually trying to accomplish. Don't just engage in discussion about products and discussion about what products are for sale, but first really articulate what we're solving for. What we're solving for within that group, that asset class, and most importantly, the organization as a whole. And then once people have a better appreciation for what we're solving for, there may be an opportunity to engage in a partnership. And it might not be the simple product that was for sale. And in fact, if you try to push that product, it might be like pushing a rock up a hill.
Yeah.
But there's actually other ways we could partner as an organization. We could be creative, that we can find something that works for everyone. But it starts with just being very transparent about what we are solving for. And every organization has its idiosyncrasies, we do, and just share what they are up front.
Okay.
I would say, 100% of the GPs want to talk to us when they're raising money. Less than 10% want to talk to us when they're not and they already have their fund invested.
Interesting.
But it's those people that want to come and build a relationship and talk and be transparent of what they bought and how it's going and engage in a dialogue. And like you said, get to know the client. I think far too often it's a transaction. They want us to commit. And, life is full of just simple transactions. There's very little relationship in those. And particularly in the private markets, those are 10 to 15-year investments, and you want follow-on investments. So then it needs to be much more of a relationship and a dialogue. There needs to be open transparency. It's not about, remember the deal. It wasn't about the 2% management fee. It was supposed to be about the 20% fee return split. And, I don't think that enough GPs have that honest dialogue. And we've already seen people monetize that 2%. And the 20 is supposed to happen, but, right now in this environment, it is delayed forever. But having that discussion with that client, thinking longer term, I've seen some of the best LP-GP relationships coming from consistent long-term understanding of the firm. One of my favorite times of talking to a marketing person about their products, and they now know they need to learn what is it we need. Don't come in and just sell me something because that's your product. Come in and find out what I need. But to where a marketing person said, we're actually not very good at that. That product is being revised, and it's like, boy, that honesty is so refreshing.
Yeah.
Otherwise, everybody's number one. First thing I do when I see your number one chart is look at the time period. Wow, 8.5 months. That's an odd time period to be number one. And believe me, I've seen some weird numbers with even gaps in them. So I think just being honest, open, transparent, admitting you're not perfect, but then showing that to the clients is critical. Maybe you won't get the sale that time, but you'll build more of a relationship that they'll at least talk to you all the time. Far too much is transactional.
And certainly, I found that the deepest relationships we have at CPP Investments are ones, and I think part of the trend is deeper relationships with fewer. Is where there's actually connectivity across the firm. And I don't just mean across different asset classes. I actually mean across the firm, truly across the firm, where I sometimes speak to the leaders there and get a sense like, what are you doing about getting people back to the office? They just think those questions where our tech teams will meet. What are you doing on different technologies? That there's connectivity not just on the asset class side, but across the entire firm.
So there's a question here in the iPad for you, because I feel like people are maybe more honest when they are retiring. When you're looking back on your career, what do you wish you would have done differently?
Bought low and sold high. Been much more aggressive in market downturns. It's hard to reflect, and obviously I always say hindsight's 20/20. If you get LASIK, it could be 15/20, so you can see even better. But I think I've always wondered if we could have pushed the team harder. When I look at the asset classes, I pushed the board to expand. By and large, they proved out, when I look back at 25 years, to actually make a great return. I don't know. Probably just develop the staff and give them even more career opportunities earlier.
Okay.
I'm amazed at how, Sacramento's not a finance town. It's a state capital. It's a government town. But you've got CalPERS and CalSTRS, both employing close to, 600 investment people and managing well over, I think both of us in-house have $400 billion. You just don't think of that as being a finance town. Yeah. But developing that staff and growing them, and
it's actually really
probably doing mentoring probably even earlier. It's tough.
Okay. There's a question in the tablet here for you also. What is a time that somebody has broken your trust as a GP? Can you tell us a story about that?
Broken our trust as a GP. What is a time when a GP has broken our trust? I got to make sure I don't give specifics on it.
You don't have to use their name. They might be in the audience.
Yeah, broken our trust as a GP. Look, I think I think through the different relationships we've had with GPs over time, and I'll come back to things that we've been talking about is transparency, and areas where we've been talking about just how the importance of transparency. And we all know in this business that things go bump in the night. We all know that there's times when things aren't going to work out, and we know that in a portfolio, there'll be some things that are working really well and some things that aren't. And what we all ask for, and I think it's kind of expected, is that bad news travels fast. And I think where we have been disappointed, and it's probably caused real damage to the longer-term relationship, is when performance has not just been open and honest, and when things go bump in the night, that we don't hear about it. Especially if we have a co-investment or some type of increased financial position in the investment. And I think that is where the team gets very frustrated, and that has probably been one of the causes where we've moved on from certain relationships where we just feel there's not enough transparency. Is when things go bad, which they periodically do.
So AI is all. Go ahead.
I've got a juicy one.
Oh, good. I like
He's retiring.
Yes, we can ask him all the questions, and we'll get the truth.
This GP threw
Buckle
a
up.
private dinner on Monday night.
Ooh.
So I walked by their cars. So I'm like,
GP
oh,
grudges.
that's interesting.
LP grudges.
But they came to us. They pitched the board on this elaborate idea, which sounded great. And the board backed it enthusiastically. 9 months later, they announced to the LPs that, well, that actually isn't going to work, so we're not going to do that. Completely shifted course. That didn't feel very good. And of course, invested the money, came right back for Fund 2, knew that because they hadn't been very honest in Fund 1, they needed to team up. So this time they teamed up with a superstar partner that was going to be amazing and convinced us all it was an absolute joint venture. Every decision was going to be, together, and they were going to do everything together. And boy, not even 3 years into the partnership, it was very obvious they didn't even speak to each other. They didn't even like being in the same room with each other anymore. There was no collaboration and cooperation. And we actually had to go, I think it was probably year 5, when finally all the LPs agreed and dissolved the partnership. I mean, that's pretty rare, and pretty remarkable. But obviously, that person throwing a party here is raising money again. So everybody can, be resurrected and come back, and there is forgiveness. But boy, I'm glad I'm not around to talk about it.
That is spicy. We're going to have to get a couple drinks in you and find out who it was.
Nope.
Just kidding. So we haven't talked about AI and technology and what that's going to do to truth and trust. I think it's clear that in a world of deep fakes and that we're heading into, that finding truth and trust is going to be harder than ever. Does anyone want to jump in on the subject of AI and technology and what they're fearful of or what they're hopeful of when it comes to the trusted brands you've built? Go ahead.
I'll jump out. I shared I was amazed. I went to the AI panel over in the hallway, like Michael says.
Which one? There were so many.
I know, there's a million. But I like to go to the side rooms a lot. And they said the word trust over and over and over again. And I thought, wait a minute, AI, trust, what does that relate to us? But they emphasized that AI needs trusted data so that then they can trust the answer out of AI. And we've all had experiences probably with it hallucinating or coming back with, as I shared earlier, incorrect data. And I thought that was really interesting, that here this product is going to take off and apparently dominate our lives. But there's got to be that core basis of trust, and I don't know if it's earned it yet.
Yeah.
So we were talking about this in the green room, right? Every panel has an AI question.
AI washing almost.
Exactly. I mean, everybody knows it's. I see it as the next industrial revolution, and we've talked about AI, and we continue to talk about AI at Northwestern Mutual. And I see it as, I see companies in sort of 3 different sort of themes. One is there is the wait and see approach. The second is test and learn. And the third is, I don't really care, I'm just going to do whatever it takes to get into this AI thing, right? That's the third. We are looking at it from a test and learn. And so obviously we're looking at our own internal, so we've created our own guardrails around ChatGPT for our employees, and they've started experimenting with our own data for employees. We're doing it on the servicing side of things. For our advisors, we've created content that they can use. But it's all very guardrailed with our partnership with Microsoft. And ideally, in 25, 26, we learn from it and start to integrate it within our content modules and things like that, right? But what we have to be particularly concerned about, to what you said, Chris, is the data that we have, in our case, health and wealth. We have to make sure we have guardrails, we have governance structures, so we've created an AI council. Privacy matters more than anything else because right now, it's everywhere. Anyone and everyone can use it, right? There's a whole democratization that's going on. So those are the conversations we are having at work. It's not just about using ChatGPT in a cool, innovative way. It's how do we create good guardrails and protect the privacy of our clients, because that's where trust can get broken.
That's a very good point. That's a very good point. So we are heading into a world, I think, where truth and trust will be the North Star for brands.
Yep.
You know, they talk about the authentic brand. I think brands that are trusted are going to have a huge leg up, and I think there'll be information sources. You know, if you don't trust the media, but you do trust, you know, California
It is
teachers.
really frightening with social media how people and those algorithms, as people said, just get sucked down into a vacuum. And, you know, to sit here in 2024 and say there's some percentage of the U.S. population that now believes the Earth is flat.
Oh, the flat earthers are huge.
That's just mind-blowing. And that means they live in a vacuum. And and I've learned that with teachers. When somebody tells me something that's now a fact about contrails or something, my first question is not to challenge them, but to say, gee, where do you get your news from? Where do you get your information from? And it's absolutely fascinating because we don't read newspapers anymore. What's their news source, and how did that algorithm just take them down into this vacuum where they're hearing their own people? And I mean, that to me is a legitimate problem in society. And you're right, misinformation, a lack of trust. We're going to obviously have a giant experiment, sadly a social experiment with that in the first Tuesday in November.
So I happen
whatever
to
will
know.
follow.
Wait a minute.
Oh, yeah.
So the world's not flat? I also want to say
Doug's
we did
a
not
flat
have, Lord Abbott
earther.
did not have a dinner Monday night. So crystal clear on that. I will say on the AI, I do think on the AI thing, and you know, look, I'm probably the last person who should talk about AI. I do think what it's done is it's made everybody rethink their relationship with technology. And I think that's really good for people. And I think that a lot of times where, you know, people were, you know, used such a small amount of what they could at technology at their fingertips, I think it's going to start the acceleration that's eventually going to make us all more efficient and better as workers, things like that. I mean, remember the first 3 weeks, everyone was like, we're going to be able to get rid of 65,000 jobs. And you're like, geez, like that seems awful. Like, how about instead of somebody doing something that's very manual that kind of stinks, can AI do that instead? Like every quarter when we have to write updates, can we, you know, put the attribution analysis in, and then that way we're now editing? Like, how do you make that person more effective? And I think everybody's relationship with technology has really changed. I think like all, it's going to be a data issue. It's going to be blocking and tackling. It's going to be how do you figure out how to use it over longer periods of time.
So someone asked in the Q&A, which I thought was an interesting question. Forget about financial services for a minute. Just as a human being, what brand do you trust? What would you throw as what comes to mind first as trusted brand? Anyone want to go first? Just in your life as a human being.
I'm thinking of all the things I could say that would be super controversial.
Stumper. Anybody?
Well, we trust our banks to some extent, because
Some of us
almost
do,
everybody
some of us
here
don't.
uses banks, but you probably might reconcile. Nobody has a checkbook, but reconcile. You trust but verify. Obviously, you know, we trust our cars and we trust the people that manufacture it. So
But give me a company, give me a brand. Who do you trust?
I'll give you one.
All
I'll
right.
say, not a plug, but I'm a Northwestern Mutual holder.
Woo,
And
isn't that good?
I do trust them. They've, I've won,
And I didn't
well, no,
even
you've
pay
won
to
the
see
bet.
that.
I'm still alive, so I don't want to pay you money. It's
And he's
actually
going into retirement, so
really a
he's
good
going to really
thing to
need
send
So
you a
glad.
check and say, yeah, I'm older for another year.
That's
But anyway.
amazing. All right, Northwestern Mutual.
But I probably have had that policy, gosh, since,
I'm complete.
yeah, 90s.
Yeah.
That was awesome. I love that moment up here. Doug,
I would say, I don't know if I would call this a product, but I would say the medical community. I think you see, like my doctor, they get better and
by the
better
way,
every
most
year.
trusted right now are scientists and doctors.
Yeah, I mean, I would say,
Even though
look,
we didn't want vaccinations. Okay.
I would
That's
say
what the
just the
data says.
experience through COVID, right? And just the ability, how they change, how you think about telemedicine, how you think about
But a
other
brand in
advances,
there, is
things
there a
like-
brand? Is there a single company you would throw out?
I'm sorry? If,
Single company.
uh,
Gosh, this is bad.
I don't know.
You don't trust Apple?
All right, we've got a lot of work to do, people. Do you have one?
Well, I'm completely biased.
Okay, that's fine.
Tim Hortons.
Tim Hortons, yeah.
Anheuser-Busch.
Canadian brand.
Tim Hortons is very
Molson.
trusted. You know exactly what you're going to get
Grillers,
every
yep.
time.
Wait, what did you say? Or you didn't yet?
I actually do believe that within Canada, CPP would be viewed as probably one of the most trusted brands in the country.
That's true.
I think it's viewed as an organization that has essentially kind of, to date, met kind of the promise that's been made to people.
Yeah.
And I think there's two things that are very emotional for people. Well, there's more than two, but there's healthcare and pensions are very emotional. And I think anytime public policy drifts into healthcare or drifts into pensions, it gets emotional very, very quickly.
Yeah.
And for CPP to have we're celebrating our 25th year anniversary this year. We're only 25 years old. We got our first check 25 years ago for $12 million.
Oh my God. And
Yeah.
what are you up to now?
Over 600 billion.
That's incredible.
Yeah.
Wow.
And of that 600 billion, over 400 of it is investment income that's compounded. And exactly what Chris mentioned, just that it's a promise to people, and everything we do is to meet that promise. And I do believe, and I'm totally biased, that it is one
Yeah,
of the
but
most trusted brands.
I
in
think
Canada.
it's fair to say, I mean, we all believe that the brands we work for, you know, I think we all believe
this
that
is
we
a
trust
good
that. This is, I mean,
group of
that's
people.
why we're here, right?
Definitely. But you're not throwing out any names like maybe Band-Aid, Johnson & Johnson, Pampers. I mean, anything?
Tylenol.
Nothing in your lives? Band-Aid, I think, was the #1 trusted brand when I looked it up in the consumer space. And oddly enough, Amazon got high trust ratings, but I think that's because of reliability. I mean, it just works every
just
time,
works.
right?
Yeah,
So
it's the experience.
I think it gets back to those 4 words that, or 5 that Deloitte used. And a Deloitte study also said that people are more, this is not a shocker, but people are more likely to refer a trusted brand 10 times more than another company. So this is bottom line stuff. So we only have a minute 24 left. Why don't we stop by asking you each, what is your final word, your final thought about trust in the future? Do you want to start?
Sure. I think trust in the future is going to be absolutely critical because trust is now separating so bad. But I think it's about being authentic.
Okay.
Oh, yes. One of the things I didn't get to, I mean, I talked a lot about purpose.
Yep.
To me, the other really important part is people. And really investing in the
Humanity was one of those words, remember?
Yeah, and people and the importance for organizations such as ours that we don't make widgets. You know, we make decisions, and investing in the people in the organization.
Aditi?
I have 3 things around building trust in the future. You need to have the intent to build it, the ability to build it, and you have to have the obligation to build it. As leaders, all 3 have to be done.
Doug?
I would just say for any leaders or aspiring leaders in the audience, I would say, when you think about trust in the future, it'll be very similar to the past. And it'll all about being, predictable, being who you are, being a good leader, get better every day, understand you're going to make mistakes, do better after you've done that. and always do what you say you'll do. I don't think it's
All
harder
right.
than that.
Well, we're out of time, folks. Thank you all for coming. Have a great rest of your conference.